Good morning and welcome back everyone to the Money Control live stream. You're watching Markets with Santo and CJ. Santo, finally welcome back. How are you feeling, man?
I had to, come back earlier than planned because I could see that you were trying to rob some of my faithfuls.
Yeah, definitely. I think I also probably succeeded in overturning a few of them, but not all of them. I'm sure your followers are quite loyal to you, so I don't think they're going to flip sides so quickly. But great to have you back. And that said, let's get the show started then. Well, it's a great setup for a brand new week for the Wall Street at this point of time. If you look at the Nifty futures on the Singapore exchange, they're indicating almost a 150 to 200 points gap of opening for the Nifty in the local market. Wall Street cues from Wall Street also were quite good. We saw a big rally on Friday evening in Wall Street, so clearly the cues from there are positive, and the Asian markets themselves are doing quite well. Now the setup has, of course, the sentiment it seems has sort of shifted over the past 2 or 3 sessions. Clearly, the fall in commodity prices is what is driving sentiment at this point of time for the equity markets and the bond market as well. You look at the US Treasury market, they have seen yields go down because now the expectation is that probably the Fed may not have to go as aggressively on rate hikes probably as the situation was 3 or 4 weeks ago because of the mayhem that we are seeing in commodity markets at this point of time, which then again is actually a function of expectation of a global economic slowdown and a possible recession in the US. So clearly at this point of time the contrarian trade is working in the markets. Santo, what is bad for economy seems like it's good for the market.
It's true, and that's what's making matters more tricky for investors and traders alike, because even in a down market you see this occasional relief rallies. It's something of that kind that we are seeing right now. But having said that, there's no mistaking the cautious mood in the market. If you speak to people, they'll still say that they've been pretty guarded, and most of them in fact have missed the sharp pullback. Understandable, because when you lose a lot of money in a short time, you would not again want to participate so quickly. And I don't think that you could see any big buying now that the first quarter earnings season is just at hand. Mostly investors would want to wait and see, look at the earnings numbers before taking a call.
Well, Santo, if you keep waiting on this market, it can leave you by at any point of time. So clearly, I don't know if waiting is the right game to play at this point of time. Of course, all that you can do at this point of time is just be nimble and be sure-footed about what you are trying to do, even if you're going bearish on the market or you're going bullish.
Yes, it's more of a trader's market in the short term, no denying that. But then one needs to look at the risk-reward ratio also, CJ. What is the kind of upside that you're looking at vis-a-vis what could be the possible downside? And I don't think the risk-reward ratio is that attractive that you just throw caution to the wind.
Come on, we have seen 17-18% correction in the market. I mean, how can the risk-reward not turn favorable at least?
But
on a relative basis.
True. Again, the correction that you have seen probably is in price, but then there's still no saying where the earnings are likely to end up. We are still assuming that the earnings will still be the numbers that you have estimated before, and that at this point looks a little iffy to me, CJ.
Well, from the macro, let's quickly dive into the micro side of the market, and that is individual stocks. Now, me and Santo have 5 stocks that we want to talk about, starting off with Santo.
It is Vedanta. Now, CJ, this is a market where again you should look probably for stocks which are offering value. Vedanta seems to be one of that.
Yeah, you're flipping on Vedanta now, is it?
No, at a price probably everything starts to look attractive. Now, this is a stock which is corrected hugely. More than 50% drop in less than 3 months.
Absolutely.
That's quite sharp. And there were there's some negative developments as well. The company trying to sell its copper plant at Tuticorin, but according to analysts tracking the stock, probably the fall may have been overdone. And JP Morgan is one of the brokers who's bullish on Vedanta. JP Morgan's argument is that maybe the market is pricing in the worst. Possibly about 2,300 per ton for zinc, 2,500 for aluminium, and about $80 per barrel for crude. According to JP Morgan, zinc inventories are at multi-decade lows now. Zinc prices did fall sharply, and aluminum prices too have cooled a bit. But JP Morgan is of the view that these levels are unlikely to sustain, and probably the market is pricing in the worst. JP Morgan has a price target of 490 on the stock.
Well, Santo, I think market will continue to price in the worst going ahead because we have only seen about a week of correction in commodity stocks. If you look at the recent phase of the correction, of course, the earlier phase of the correction also came from a very elevated base. So clearly, a lot of it you can attribute it to froth instead of fundamentals. Now you are actually for the first time seeing fundamental-driven selling in commodity stocks for the first time because there is now concerns over demand. Over the past year or so, demand was not really that much of a concern for the market. Now clearly that is there, and I feel that probably if you look at commodity stocks as a basket, I think probably could remain under pressure for at least a few more weeks as this sort of fundamental gets priced into the market. Apart from that, you look at the margin side of the business, that is going to take a beating given the way the prices are falling, the sort of impositions that have been made on domestic players at this point of time in terms of their export. So clearly H1 margins or the April-September margins and possibly even the December quarter margins could come under pressure in FY23. Also optically so because FY22 was such a big bang year for metal companies. So clearly it will take a lot to outperform on that sort of a base. So clearly optically as well as fundamentally, probably the earnings are not going to look pretty good from here on, Santo, for me. And the other thing that I think could be a dampener for Vedanta is the expected sale of the Tuticorin plant. I mean the copper smelter plant, and I just feel that the timing is a little off. Given that if you talk to people in Goldman Sachs and Morgan Stanley, they have been so bullish on copper, for the next decade. They believe that because of its utilization in electric vehicles, in the entire renewable energy transition, copper is probably going to be the metal of the decade. And at such a point, Vedanta trying to cut its losses on Tuticorin seems a little against the grain or against the wind at this point of time.
But if it's unable to open that, run that copper plant at all, what difference does it make?
Well, if it is unable to open it, then what's the guarantee that the future buyer will be able to? And that probably will itself degrade the value of the plant probably much lower than where its fair value is. So I think that probably is going to be an overhang on the stock. One stock that probably is going to be the most in action today is Zomato. It will be difficult to call which way the market reacts. Clearly, if it's look at what analysts have to say, they feel that the deal to merge or acquire Blinkit for about in an all-stock deal is going to be positive for the company. Remember, a few weeks ago, I told you that this is a deal that even though it will probably delay the path to profitability for Zomato, it is something that they have to do. It is a poison pill of sorts, Santo, that they have to take because they have to fend off competition going ahead in the fast-paced grocery delivery business. And also, let's not forget that this is something that can probably, be synergistic for Zomato going ahead. Yes, they had backed out of the grocery delivery business last year, but clearly at this point of time, because new competition is coming in, new money is flowing into that sort of a segment of the market, I don't think Zomato can afford to stay out of it. I think it will be a detriment to its market share, to its overall revenue and profit potential to stay out of this deal. And clearly, I mean, that is the sort of commentary that we are also seeing from a lot of brokerages such as CLSA, UBS, who have retained their buy call on the stock and are expecting upside of as much as 28 to 35% in the next 12 months. So this is one deal I think probably investors will at the end of the day say, let's look at the longer term picture in my point of view. Ultimately, it's going to expand the profit pool, it's going to expand the addressable market for Zomato, and all said, all done, it could end up being the positive boost that the stock needed at this point of time.
Well, CJ, when the stock had fallen to about 50 levels, right, that's when there was maximum approaching it slightly differently, that was when there was maximum pessimism about the stock, and that's where the opportunity was there for the short term. You've seen the stock bounce back a bit, and now suddenly everyone is turning bullish on the stock. And if you look at the price targets, most analysts are saying that they expect the stock price to touch about 90 rupees over the next 8 to 10 months. Now with Zomato, the concern here for most, the concern here I would say is in the context of the broader market, right, where investors are becoming very choosy. As I kept saying, theme stories are no longer the flavor right now, and Zomato, till the time it delivers on the numbers, it will continue to be more of a theme story. So maybe it is a good stock from a very long term perspective, but I think in the near term, at least for the next 6 to 8 months, I don't see the stock making any big headway.
Santo, I think if global macroeconomic conditions do reverse and it becomes again, and we start talking about rate cuts and all, then obviously a stock like Zomato becomes an automatic buy for you, given that you will see PE expansion happening because of the lower cost of capital for a company like Zomato, or when you are valuing a company like Zomato, given that your profits are far into the future, and when you discount it at a lower interest rate, clearly your present value is going to increase. So at this point of time, yes, it remains the most divided stock on the market. You talk about Zomatos and Paytms of the world, clearly at this point of time, you can't convince either side, right? You can't convince the bull that the bears are right. You can't convince the bears that the bulls are right. So yes, I would have to take your opinion on it, but I just feel that probably now is the right time for those
True,
who are
but then
looking for a
also
long
see
term.
now the food tech business also seems to be maturing. It's fairly
Yeah,
stable.
exactly.
There are two players. Also, Macquarie had flagged the concern that the number of returning users, or the number of consumers who should have to make orders at least once in a month. That number has not really grown for almost 3 quarters now. Now that's a bit of a concern. So I think the company could take some more time to probably get into the green, and that is one of my concerns about this stock.
Possibly.
Well, Gujarat Gas is the next stock on our watch list. Again, a stock which has taken quite a bit of beating, negative sentiment over rising gas prices. Gujarat Gas has got hit by that. But Motilal Oswal feels that again the panic may have been overdone, the pessimism over Gujarat Gas may have been overdone, and increasing availability of domestic gas could to some extent help solve the gas sourcing problem of Gujarat Gas. Very interesting, CJ, this is not a case where there's been a very sharp deterioration in earnings, looking at the way the stock was punished, one would think that, there's been a very steep, but that was not the case. In fact, the fourth quarter numbers were a big surprise. And yet, because, gas prices were rising and there was a pushback from consumer, the demand had got hit, you saw the stock correcting sharply. Motilal Oswal has a price target of 650 rupees for the stock.
Well, Santo, I just feel, that the fact that prices or spot LNG prices are probably softening a little bit because of what we are seeing in global commodities at this point of time. Previously, if you see, Gujarat Gas ended up taking a price cut instead of retaining that price cut and probably recovering a lot of the margins that it would have lost in FY22. So clearly, at this point of time, the management doesn't seem so focused on playing the margin game. They are like, if the prices have come down, we are going to pass it on to the consumers and play the volume game. If the prices don't come down, then we're going to just stay where they are. So clearly, I think that sort of beats me a little bit, because when you have an opportunity to probably recover a little bit of the profit in the short term, especially after the sort of a March quarter where you said that volumes have been quite strong, volumes were quite sturdy. I don't really get, if your volumes are sturdy still, why not retain that price hike for a little longer point of time and recover on some of the margins, and then maybe later on you pass it on to the consumers. So that will be our first point. The next point is now that yes, margins were the concern earlier, but now the new concern in town would be the demand side, right? We know everybody's talking about an global economic slowdown, a US recession, and clearly India is not going to be any oasis out of it. Even at home, we are going to see demand get hurt. We're going to see economic activity get hurt over the next 12 months if the worst case scenario plays out. So clearly now the narrative will probably on the stock shift from pricing and margins to the demand side and volumes, and I think that is why I feel that this stock could probably remain range bound in the near future, especially after the sort of correction it has seen. I don't see a V-shaped recovery on the counter. One stock where, of course, we have seen a lot of correction this year, but at this point of time, the fundamentals still don't show it, is Naveen Fluorine. Now, this is a company, it's a specialty chemical company which has delivered great returns for investors over the past 5 to 6 years. It is one of those stories in the chemical space that has long-term potential, as we all know. Recently, JM Financial came out with a report, and they highlighted that the hydrofluoroolefin market that Naveen Fluorine is part of, that could be one segment that could really drive earnings growth for Naveen going ahead. Santo, they believe that their recent contracts with Honeywell, which also, by the way, owns almost 70 to 80% of the patents on HFO market, could really boost earnings going ahead, and they have retained their buy call on the stock given the long-term growth visibility, not only for the overall basket but for the HFO segment as well.
Well, there's an interest.
I think, Santo, we should just look at the market first before we get into your points. It's been a very, very strong start. Nifty higher by about 217 points at this point of time.
Yes, and good breadth also. We are close to about 1900 stocks trading higher than the previous close, and just about 140 declines on the NSE. Nifty Bank is also showing strength there.
Yeah, I mean in the broader market also, Santo, you can see a lot of strength. Nifty Mid Cap 100 Index higher by 1.3%. Nifty Small Cap 100 higher by about 1.5%. So very, very broad.
Yeah, good strength in IT stocks
this
morning. Infosys, Tech Mahindra, HCL Tech among the big gainers. Also Bajaj Finance, DRL and IndusInd Bank.
Yeah, I think probably the entire Nifty basket is in the green. I doubt there will be any losers today. This morning it seems to be a very strong start, but we have to be very usually gap up openings, whether they will sustain or not, that will be the question. If we can add to this and probably head towards that 16,000 mark, I think that will be the next big trigger for the bulls, Santo. We have crossed the 15,800 hurdle. I talked about it last week, but now the next hurdle would be 16,000 points for the bulls. If they can cross that, then probably that will add even more confidence that a trend reversal is on the offer.
Well, I would again still maintain my view. I think this is still what you're seeing is a relief rally, a bear market rally, as I would call it.
I like the market talk, Santo.
Yes, true. It's true. See, because of low participation, the market is just flying higher. You're not seeing any major selling coming in at this point. I would say that it's more of lack of selling pressure rather than huge buying that's taking the market higher. Well, on the stock you mentioned, Naveen
Fluorine.
CJ, interesting stock. At this point, I think is among the few chemical stocks which are still, pretty much held well in the recent market correction. The stock is barely down about 10% from its peak, and as you pointed out to the fundamentals, demand for refrigeration gas remains quite strong, which is the key area of Naveen Fluorine. So this is a stock I would say still paced, still looks better when you compare it to other chemical stocks. I've not been a big fan of chemical stocks. In fact, most of them are overvalued.
I know, for the past 2 months, I've been trying to convince you.
Just 2 points here. One is that the stock is still expensive. It's about close to 10 times book value. There's no denying that. But it's showing strength in this market. Yeah. Point taken. Secondly, the promoters have slightly trimmed the stake in the March quarter. Now that's very surprising. Already,
I'm sure they have a wedding in the house.
Oh, probably. They're holding just about barely 30%, and still they've chosen to trim stake at a time when the overall outlook on the sector is now beginning to look a little shaky.
I don't think so, Santo. The shaky days are gone for chemical companies. The good days, the solid days are coming ahead. Maybe not the stellar days, but the solid days.
It'll be very stock specific. Well, the last stock on our watch list today is Hindalco. Again, a stock which has been punished quite badly by the market, along with the rest of the metal space. Now, in the case of Hindalco, according to broking house IFL, again it seems to be pricing in a worst case scenario. The stock is quoting at close to about 0.8 times price to book value, which is just about slightly higher than its average for the last 10 years. And that is low considering that there has been a significant improvement in Hindalco's balance sheet. Besides the fact that the outlook for Novelis business is quite positive, IFL feels that demand for Novelis products such as beer cans and the sheets used in auto and aerospace, demand for that is going to pick up in the near term. And also you've seen some kind of you've seen a steep fall in aluminium prices, but maybe that's already priced in, and at these levels the stock is looking attractive according to IFL.
Well, Santo, I think my shows on Friday at least converted one person, and that is you on Hindalco. Clearly, you were quite bearish once upon a time ago, but now you're clearly seeing the value on the stocks. But my only concern, even though I am overall longer term bullish on Hindalco, at this point, as I mentioned about Vedanta, I don't think that the sell-off in commodity prices is done yet. And we know how interlinked commodity stocks and commodity prices tend to be, global commodity prices tend to be. So just on that factor, I just feel that probably you could see more downside. Yes, you can't time it. It could be 5%, it could be 10%, it could be 2%, and or maybe it's just all over. You have already factored all the negatives in. But clearly at this point of time, it just feels like that maybe commodity stocks are in for a little bit more drawdown going ahead. And I think that will be the only thing that will make me a little cautious on the counter in the short term.
Well, with that, it's a wrap on this edition of Markets with Santo and CJ. Thank you for watching, and do let us know about your feedback on the show. Post it in the comment section below.
And do follow us as usual on the social media links at the bottom of your screen. And for rest of your financial news, stay tuned to moneycontrol.com and download the Moneycontrol app. We'll catch you live again at 3 p.m. with all the day's action. Till then, have a great trading session.